Hi, good morning, everybody. This is Hyperwave. I'm here with Tyler Jenks, and today we're going to talk about obviously what's going on with Bitcoin price action and also a little bit about traditional markets. It is Friday, so at least weekly with weekly candle for traditional markets, although obviously we're going to have some fun Sunday as well. But since we like to do these quickly right now, I'll turn it over to you, Ty.
Great, thank you, Leah, and hello, everyone. Thank you, those that are staying up late to listen to this, and those that are getting up early to listen to this. We will do this every day. We're sorry about doing it late last night, but we couldn't help it. We will squeeze it in sometime whenever we can. We'll try to be on a regular schedule in the morning. I think that's the best way to go. But let's get right to the charts. So here is our Bitcoin prices, basically going sideways to down for the last 24 hours. Let's look at the weekly and the daily, and really the only action has been on the hourly, and we can see from 77.50 this slide down. We have not come down to the lows of 74.82 on this chart, and we're at 75.82 right now. I called it neutral. It's still neutral, and I tweeted out this morning that during periods like this, the best thing to do is to sit on your hands. Don't reach for the sell button. Don't reach for the buy button, because it's indeterminate, meaning we don't know what the next 5% looks like. We will get some evidence, some clues, and then we will take action on that. So what you're basically looking at is the same thing we saw yesterday, just 200 points lower. If it goes up 200 points from here back up to 77.50, I'll still be neutral. What I'd like to see is I'd like to see either a big sell-off or big buying coming in, but notice that the volume just remains dead, just very soft, at least in the short term. So short term is still neutral, long term is still negative, and intermediate term is still negative with the same targets, meaning 4,900 on the intermediate term, but that is increasing at 82 points per week. So every week that we tick off, let's go back to a weekly chart here. Every one of these bars is basically 82 points higher or closer to that phase 2 line, which is coming in down here at 4,000. 4,900, it'll be 5,000 next week, close to 5,100 the week after that, etc. So the longer we can go sideways, the better it is if this turns out to be a funky hyperwave, because we could literally, if we go through the summer, be right up in this territory without having to do too much damage to the intermediate term. That's a very important concept, that you have to remember that the phase 2 line, the phase 3 line, the phase 4 line are all pointed up. The phase 5 line is pointed down, as is the phase 7 line. And the phase 7 line is what we are worried about right now, until we at least get down to the old phase 2 line. We will do another whole show on Hyperwave from beginning to end in terms of the basics for those that haven't been able to sit through earlier vlogs. Probably next week I'd like to do that. Okay, so I don't really see anything too exciting here. I've redrawn the Fibonacci lines with 1,000 being the base. The reason I did that from 1,000 up to 19,666 is it makes a slight difference in where these lines are coming in. The 50% line now is coming in at 10,372. the 61% at 8,177, the 78% line at 5,053. We're between the 78.6 and the 61.8. We're below the 61.8. We're above the 78.6, which comes in again at 5,053. What would be nice and interesting and kind of tie a pretty bow on this whole hyperwave thing is if we can drift sideways long enough to get the phase 2 line up to 5,000. Then if price drops and takes out the old lows at 5,900 and 6,000 the second time down, and we did that violently enough, we could bounce off that phase 2 line and also be bouncing off the 78.6 Fibonacci retracement. And I could see a new move beginning from there. Now, I have said that I'm only giving 1 in 4 probability of that phase 2 holding. But if that phase 2 can be sitting right on or close to that 78.6, that might increase those odds, not in favor of it happening, but closer to a 50-50 coin toss instead of 1 in 4, which is what I put it at now. Okay. I'm going to do a full vlog on that concept again, maybe next week. It's something that I've just sort of put together in my head, and that's why I moved these Fibonacci lines up a little bit. So give me a little time to work on that, but it's developing into an interesting idea in my mind. Okay, enough for Bitcoin. It really hasn't changed over the last 24 hours. What I did want to do is I wanted to bring up a couple of other charts. We're switching over to the US stock market because I've been on again, off again in terms of what I think is happening. I made a declaration almost 10 years ago that I thought the Dow Jones Industrial Average was going to hit 100,000 in our lifetime. And of course, that depends on how old you are. I'm getting very closely to 70. And so I'm saying that from my perspective. So within the next 15 or 20 years, yes.
70 may be your age, but your natural age is what, 24? How do you feel?
Well, most people think it's like 6.
Oh, okay.
But I appreciate the sentiment.
Oh, okay, okay.
I do have a popsicle again. So, all right. So what you are looking at now is the Dow Jones Industrial Average since 1980. 1980 and 1981 are that period, that 2-year period is enormously significant in terms of the macroeconomics of the world. And we will do a show just on why 1981 and 82 are so important. Just very briefly, that ended a 17-year period in which the Dow Jones Industrial Average did not move up at all. From 1965 to 1982, not shown on this chart, the Dow went sideways at 1,000 on the Dow. What you're looking at here is the beginning of the end of that 17-year period, which includes this tremendous run-up, broken into sharp moves up and then sideways moves down, and then the biggest move of all is this last 10-year period to the upside. What also happened in 81 and 82 is that Paul Volcker, as the Fed chairman, killed inflation and started a 40-year decline, approximately, of interest rates. And you've seen my chart of the 40 years prior to that, in which interest rates kept going up higher and higher and higher. And then we went into almost hyperinflation, not quite, but inflation got over 20% in the end of the 1970s. Yes.
Keep going with your train of thought. And also in the live chat, there was a question about how you think that increased interest rates right now will affect the market. So if you could take it to present day as well.
Yeah, very good. I will get to that because that will be important. But let me just say briefly, don't worry about interest rates. Because we still got huge deflationary pressure around the world. And what our Fed is doing with interest rates has little or no effect on any of the macro. It could someday, but we want interest rates to go up. We'd like them to go up twice as high as they are now, maybe 3 times as high. But we want it to go up because the economy is getting stronger and stronger and stronger. And that is very, very bullish. And we will, I'm hoping, Leah, you can be taking notes of all these promises I'm making about future vlogs, but one of them will be on the relationship between interest rates and the stock market. Okay, so this is a very long chart, but I wanted you to see it because of Bitcoin. And what I mean by that is, you've heard me say that I'm nervous about Bitcoin being as high as it is relative to the relative strength index. And up above here, you see a very long period of the RSI right here. And what I'm nervous about with Bitcoin is the fact that it had been overbought for a very long period of time, like this period and this period. And on the correction that we've had that's been enormous from 20,000 down to 6,000, we never got oversold. Now notice here, we're talking about this period, the run up to this period. These were the 5 best years in stock market history, US stock market history, from 1995 through 2000. We're going to look at the NASDAQ in just a second and the S&P, but this is what happened to the RSI during that period. It just sat in overbought territory for year after year after year. At some point, you're going to have to pay for that. And here is the big crash that we had, 50% drop in the US stock market from 2000 to 2003. And guess what? We just barely touched the 30 line. Just barely at the end of that period. So we still, in my mind, hadn't paid for it, hadn't paid for all of this growth. Then look what happened. The RSI then got overbought again as we ran up prior to the 2007, 2008, 2009, 50% plus drop in the stock market because of the mortgage mess. And this time we finally did it. The RSI did get oversold. That's an important perspective to keep in mind as I look for lower and lower prices on Bitcoin. And you need a long-term perspective in order to pick these kind of signs up. Now, here is where we have gone recently, and notice that we got up to 90, which was higher than this overbought, much higher than this overbought. And now we've come all the way back down below the overbought territory. And that's why I was getting nervous. You don't want to move from strength into weakness on that RSI. But you can't see it on this chart. The last 2 or 3 moves short term on the RSI has brought it back up to 72.87. In other words, back into overbought territory. And at the same time, the price has started to move up on the Dow. It's too early for the Dow to get really excited. I am fully invested, as you know, for clients in the stock market. I was nervous because of the NASDAQ, And here's the NASDAQ 100, the same length of time. Looks like a different chart because of this huge run up in the dot-com bubble. And then the crash that was 80%, 80, all the way down. And it took us all the way till 2.5 years ago to get back to that peak. Whereas on the Dow chart, you'll see that we got well above the peak here, and then well above that peak just 5 or 6 years later before going much stronger. So these indexes do not move together, particularly the NASDAQ relative to the amount of technicals that are in it, tech in it. But I wanted to show you again what the RSI looks like over this huge period running up. We didn't pay completely for it here, even with an 80% drop. Much more than, not much more, but much more similar to what we've seen in Bitcoin. Then we had a strong recovery up before the mortgage crisis. This did not recover nearly as much as what we saw on the Dow. The Dow actually went much higher. The NASDAQ went much lower. Therefore, you wouldn't expect the relative strength to get up into this kind of territory, and it did not. But on the following correction down, even though we didn't get as low as we had back in 2003, we did get lower on the RSI and we got oversold. So again, I started getting nervous and talking to you all and my clients about this period we're in now. We are in an oversold territory. We pulled back, but now we're back up at 78 after coming all the way down to 72 just a couple of months ago. And that's actually very bullish. You just don't want to come down and get through that middle line and then start probing for the oversold territory. S&P, more similar to the Dow, except here you see we went a little higher, not much higher. We went a little lower in 07, 08, and 09 than we had in the bottom back in 02 and 03. So let's look at the RSI. Same pattern. You didn't get the deeply oversold until the second bottom right here. So we're sitting around 40 something on Bitcoin on the RSI after having this long period of positive relative strength. Now, I could show you the same thing on the MACDs down here, but I'm not going to take the time because this is just a brief look at things. But I just wanted to bring to everyone's attention the idea that I'm not just pulling these technical things out of my hat in terms of making comments about relative strength in Bitcoin. It comes from looking at many, many past movements that were hyperwaves, or if they weren't hyperwaves, they were close enough to it that you need to consider it in terms of some sort of a model or an example for what we are going through now on Bitcoin, and simply don't discount it from the perspective that Bitcoin, there's never been Bitcoin before, there's never been crypto before. Please just erase that from your consciousness. That's silly talk. That's meaningless talk. It's an asset class. Doesn't matter what you call it. The thing that causes movement in asset classes are people. And that's like saying we've never had people before, therefore. It is people and people's fears and people's greed that moves prices. It does not matter what the asset class is. And with that, I'm going to turn it back over to Leah.
Thanks, Ty. I always like your shirt today. Sorry, there seems to always be reverb on my side. Ty, a couple questions.
Yeah.
If the question is regarding the length of time, if the time in an oversold position makes a difference.
No, it doesn't. All you've got to do is you've got to get down there. That's what capitulation is. capitulation on the downside is becoming deeply oversold, and that's why you capitulated, because everybody that was holding on has been convinced to throw in the towel. That's the way you get into deeply oversold territory. If you can do it quickly, that's all the better. But it's important to do it. Otherwise, you're going to do it later on, as in the case of the Dow and the S&P. They didn't do it the first time, and you had to wait 3 or 4 more years. And that was one of the reasons that I was able to protect client accounts in 07, 08, and 09, because I was looking at those kind of charts, knowing that the first correction back in 02, 03 didn't do the job. So there are so many clues that you get. And, you know, I'm sorry you have to listen to some of the trolls in Twitter making these silly comments that TA is a 50-50 thing, you're guessing. Sometimes you'll be right, sometimes you'll be wrong. It's just silliness. The sequential system that Tone uses is about 80% accurate. And in the hands of a good technician, you can hit those kind of numbers. Tone does it regularly, in my opinion. Hyperwave, I think, is at least and maybe more predictable in terms of probabilities. Most TA is down in the 50% to 60% range. I will grant that. But that has nothing to do with money management. You can consistently make money where you use a system that is only 40% correct, because what you do is you limit your downside by putting in stop loss orders, and you let the upside run. So even if you only get 4 right out of 100, it's kind of like in baseball, anybody that can hit 400 is a huge winner. Well, 40% probability of a signal that is given over and over again, if you learn to limit your downside to 10 or 15%, knowing that those 4 times you're going to get an upside of 10 or 20 or 30 or 40 or 50 or 60%, you will consistently make money even with that. But when you can latch on to a technical tool that you understand and you are disciplined about it, if you can get it at 50%, you are going to be a very big winner if you manage your money. At 60, 70, and 80%, you almost don't have to manage your money because the odds are so far in your favor. So, good question.
Awesome. All right. Yeah, I still don't know reverb. Seems to only be on Tyler's stream. One, bruh, there is more regulation coming in. What Clayton said yesterday is extremely important. That's a comment from the live chat, not you, Ty. This is a bit long-winded, and I don't have my glasses, so bear with me, guys. But I like this one. In all other asset classes that show the hyperwave pattern, there is not a fixed finite supply of the asset. And can it be supposed that this unique feature of Bitcoin might lead to novel behavior and unfolding of the hyperwave pattern not shown by non-fixed assets in relation to wave 7 going into a funky hyperwave, I assume is the ending of the question.
Very, very good question, but not true in your assumption. There are many things, in fact, all things, all asset classes are limited in their supply. Gold is limited in its supply. It's limited to about a 1 to 3% increase per year because of mining costs and other things. If you take cost out of it and simply talk theoretically about how many Da Vinci sketches there are, or how many Monet paintings, or how many thoroughbred racehorses that have certain physical qualities and certain heritage in terms of genealogy. Those are all limited things. The number of diamonds in the world is limited, but it's being controlled by a monopoly that limits it more. The number of D flawless 1 or 2 carat diamonds is very limited. Everything has limits on it. Now, having said that, I will agree with you that the idea of starting an asset class, Bitcoin, with a limited supply that will remain limited under all circumstances is unique. I will grant you that. But don't take that argument too far. The reason an asset class like Impressionist paintings has gone from $100 to $500 million over a 100-year period is because they are limited in number and limited in artists, and the demand has grown against a limited supply. So whenever you're talking supply and demand, be careful of how you think about it. There are a lot of things that are very, very limited in supply and are worthless because there's no demand for them. There are a lot of things that are very...
Keep going.
No, that's basically my point. I do think that Bitcoin is unique, but do not make assumptions about what that uniqueness means until we can prove that the ecosystem supporting it is going to allow it to do what it was theoretically envisioned to do. And right up through today, if you are making that assumption, I believe you are incorrect. 2 years from now, you might prove that it is now becoming a correct statement to make, but it is not as of today. And the price is proving that to you.
Perfect. Thanks, Ty. And to end on that, since you mentioned thoroughbred racehorses, by the way, the Belmont Stakes is tomorrow. So if anyone's watching, shoot for Justify because
very exciting.
Oh my God. So the end of the Triple Crown. And if Justify wins, it's actually a really big deal. So with that said, and then Ty, you're gonna invest and buy Justify is what I heard.
Yeah, exactly.
So I can race them. Okay, everybody have a great morning. Okay, apparently my camera's up here today. Thank you so much for watching, and we will be back at some point tomorrow, although we are trying to make these in the morning. Tyler was kind to say the fact that it was my fault that we didn't make it yesterday. So with that said, everybody have a great Friday.
Great. Bye-bye.